Hello traders, and welcome to our Babypips course for today. We are on elementary course 3 of 11. Earlier we had discussed about grade 1 support and resistance level, grade 2 Japanese candlesticks, grade 3 Fibonacci, grade 4 moving averages, and today we are going to talk about how to use Bollinger bands, how to use Keltner channels, how to use the MACD indicator, how to use Parabolic SAR, how to use the Stochastic indicator, how to use the Relative Strength Index indicator, how to use the Williams percentage channel, how to use the Average Directional Index, the Ichimoku Hyo, how to use multiple chart indicators in your chart, and which is the best indicators in Forex. And all this is packed in grade 5. So for us to begin grade 5 for today, let's draw the intro. Welcome back traders, and so here is our course outline for grade 5. As you can see, it's fully packed and it promises to be interesting. So let's begin with Bollinger bands. How to use Bollinger bands. So Bollinger bands is one of the technical tools that you'll be using in your technical analysis. Okay, you have to use lots of technical analysis tools in your toolbox, in your arsenal, right, to trade the market, and Bollinger bands is one of them. It is developed by Bollinger, and it is used to measure market volatility and to identify overbought or oversold market conditions. Okay, when the market is quiet, the bands contract, and when the market is loud, right, the bands expand. So basically that's what the Bollinger bands look like. Two lines of moving averages, one to the top and one to the bottom. As you can see, when the market is ranging, right, see how the bands they contract, and however when the band is trending, you can see when the market is trending, you see how the bands they expand, right, in this area right here. So that is how the Bollinger bands work. Okay, let's go further to see what we can learn about it. Basically, the Bollinger bands are typically plotted as three lines: an upper band, a middle line, and a lower band. And by default, your MT4 comes with a default 20 period moving averages of your Bollinger bands. Okay, and how is it calculated? If the Bollinger band standard deviation is 1, right, if it is set to 1, it means that 68% of the market price are contained inside the bands. If the standard deviation is set to 2, it means that 95% of the market price, right, is contained inside of the band. If you really want to know how the Bollinger bands is calculated, you can go and read John Bollinger's book on Bollinger bands. So what we should really care about is how to trade using the Bollinger band, and one way to do so is by trading the bounce. By trading the bounce, so it means that once price rises up and hits either of the bands that we have, either the lower or the bottom bands, right, we take action either to buy or to sell, and that's basically how the Bollinger bands is structured. So you can see that when prices got off to this point right here, right, something happened. When prices got here, right, thereafter something happened. See that in the next picture below, price rallied down. You see the move, right? So, and the idea also goes on to say, the concept of trading Bollinger bands goes on to say that if price hits or touches the bottom Bollinger band, price is ready to bounce off the bottom lower band up. So that's the idea behind the Bollinger bands. Okay, and then the Bollinger squeeze, when the price contracts, right, like say price is ranging, well, you should have in mind that the price is moving, directionless. However, when the band expands, right, either to the up, price is ready to break. And so if the price hits and it's expanding like you see here, you should be ready to take your buys and price will move up. However, if price hits the bottom line, right, the bottom Bollinger bands, price is about to break to the downside. That is the idea behind the Bollinger band. So let us look at these examples that we have here. Once price hits this area here where you see the mouse, what happened? Price shot up, right? So what you should know too also is that this kind of setups, they are not always present in the market, but with a little practice you can be able to, master a concept. Many people use it. Okay, we'll go about detailed of all these technical indicators, but for now let's just go through them to have an idea what they are. So let us take a look at the Bollinger Bands on the actual live market. Today is Sunday, so the markets are not trending up or down. Market is closed, not yet open. However, let's just take a look. So this is the Bollinger Bands indicator, 20 periods, right? And the standard deviation. Let's just leave it at 1, okay, to close and to see how the chart looks like. Okay, this is how the Bollinger Bands looks like, and the idea is if prices hit the top of the Bollinger Bands, it's indicating sell and ESLs, and if it's in a downtrend, price hit the bottom of the Bollinger Bands, right, it's indication of a buy. Okay, so this is just how it is. You can go practice with it, it is fine. Next is the Keltner channel. So how to use Keltner channel. The Keltner channels was developed by Keltner in his book in 1960, How to Make Money in Commodities. However, it was further revised and more developed later by Linda Rakshi in 1980s. The Keltner channels indicator is almost like the Bollinger Bands. However, the middle line of the Keltner channel is an exponential moving average, whereas the lines at the top and at the bottom, they are not just moving averages, they are the average true range. Okay, the Keltner channels help us to identify overbought and oversold levels relative to moving average, especially when the trend is flat. So look at the chart here. This is a daily time frame of USD Swiss franc. To the top you see this red area right here, signaling that the price of the market has been overbought. A reversal is at hand, and what happened? Price tumbled down. However, when the price hits this red line at the bottom, this signals that the price has been oversold as well, and the reversal to the upside is imminent. And what happened? Price rode up. So in some way it is similar to the Bollinger Bands. Okay, so how to trade the Keltner channels? You can use the Keltner channels as basic dynamic support and resistance levels. Okay, so when price hits the bottom line, just know that this is a temporary pullback already since the market has been in an uptrend. So when it hits the middle line, which is the average exponential moving averages, no, it's a temporary pullback. Okay, however, when the price hits the top line, okay, no, price will fall back down. Okay, pullback occurs to the middle line, and that's how the Keltner channels. And you can use to trade breakouts as well, like we have here, how to trade breakouts using the Keltner channels. Once the candle breaks through the average true range to the top, know that a trend is about to happen or to occur, a trend to the upside. So this is the breakout. Once it breaks out, you're ready to buy the market. However, if it breaks to the downside, no, the market is about to trend downward as well. That's basically how the trend the Keltner channels work. But something interesting happened. I was looking at the charts, the indicators, right? I couldn't find the Keltner channel, so perhaps you might be able to find it in your own chart. I don't know. Indicators, Keltner channels is in here. Constant indicators, Keltner channels is in here either. Williams, it is not here. The volumes, Keltner channels is in here. Oscillators, the Keltner channels is in here as well. So I think perhaps it's outdated, it's no longer working, or maybe they changed the name and I don't know the new name it's been given, and Babypips hasn't told us yet because we do not have a new name to it. So with that being said, let's move on to how to use MACD indicator. So the MACD is a technical indicator that is used to indicate either a bullish or bearish trend. Okay, it actually means moving average, convergence, divergence. So it's used to indicate a trend either to the upside or to the downside, and this is how the MACD looks like. It has a histogram as well, coupled with two moving averages line, and it is formatted in a very unique way. One of the lines that is fast and one of the moving average line that is slow or lagging behind. So for example, how is the default setting like? For examples, like, right, let's read and see what Babypips is telling us. If you were to see 12, 26, 9 as the MACD parameters, which usually is a default setting for most charting software, this is how you're to understand it. The 12 represents the previous 12 bars of the fast moving average. 26 represents the previous 26 bars of the slower moving averages. The 9 represent the previous 9 bars of the difference between the two moving averages. this is plotted by vertical lines called histograms. Okay, so that's how the MACD is programmed, and how we to understand the MACD. Like we have said, many people have their own different ways of using the MACD. Like I do have my own different way of using the MACD. I learned it from somebody, right? Somebody I look up to in trading. So let's go further to understand what we should know, right? The MACD is they are used to trade, like a new trend. And how do we identify the new trend? When there is a crossover. When both lines cross over, it tells us something very important. So let's say you have one of the lines like this. Okay, this area here, right, where prices cross over, indicates something new. Okay, so if you have the faster MACD, the faster MACD to the bottom side, and it crosses to the bottom from the slow to the bottom, that indicates a new trend to the upside. However, if the slower MACD, if the faster MACD crosses above the slower MACD, and now the slower MACD is now to the bottom side, that indicates a bearish market. So basically, irrespective of however the MACD is formatted, right, it's used to identify two things: a break or a change of a trend, either to the upside, or to the downside, and it is always seen when there is a crossover. Okay, crossover of both moving averages. That's how the MACD works. So let's look at some examples here. Look at this blue and the red line. The red line is the slower MACD, while the blue line is the faster MACD. And in this example, what we have here, when you see the crossovers here and crossover here, what happens? The histograms, okay, they are almost out, they are almost blank because of the crossovers, right? However, when the blue line is trading above, right, you see what happens? Price tends to rise up. However, in this case here, when the blue line, right, falls below the red line, the slower MACD, right, what happened? Price tends to go down. Look at the MACD here going down. Look at prices here going down. So that's how the MACD works. Okay, just understand this in your trading toolbox right now. Okay, we'll have more examples here from Babypips. Look at the crossover here, right? This is a 1 hour chart of the Euro USD. And when the blue line crossed the red line here, what happened? The trend started and the prices of the market pushed up. Okay, so we basically on the right track. We are learning something different, but it is important for us to know this. Naturally, moving averages tend to lag behind price. After all, that's what just they are, moving averages of historical prices. So since the MACD represents moving averages of other moving averages and it's smoothed out by another moving average, you can imagine that there is a bit of a lag. Okay, so have this in your toolbox. So let's go to our chart and see how to input a MACD. Come to indicators and then come to oscillators, and you see MACD. Remember, it stands for moving average convergence, divergence. Okay, and so these are the parameters we saw the other time: 12 EMA, 26 EMA, and the 9, which is the difference between the fast and the slow EMA. And we have colors, we have levels. Okay, and let's just make this any color we like for now. Green, and what else? Let's leave this by default and let's hit OK and see what we'll get. Okay, now so this is what we got earlier on the chart, right? We have two colors, right? One to the top side and now one to the downside. However, while we are here on the live chart, we're just having one line and a histogram. Okay, but let's see how to understand this. And now this single line, when it crosses over above the histogram, what do we see? We see prices falling as well. This is not a perfect way to format the MACD, but we just use this as an example. When we are going to do a formal way of how to use indicators in trading, okay, we are going to format it in a very more better and comfortable way that you can use it. However, right now what we are doing is having an overview of the technical indicator. Just understand this is what you should have in your toolbox. Let's move on to the next indicator, parabolic SAR. The parabolic SAR is used to identify where a trend ends and where a trend is going to reverse. The SAR actually means stop and reversal. So that's the function of the parabolic SAR. So how to trade using the parabolic SAR, right? It comes with dotted lines, right, running above and below price. So when the dotted lines appear above prices, that's a sell signal, right? Like the market is stopping below here and price is going to go down. However, when the dotted lines appear like below the prices, that's indicating a buy signal. Prices of the market will rally up. So this tool is best used in markets that are trending and that have long rallies and downturns. So you can also use the parabolic stop and reversal to enter and exit market. Say you are in a buy trade, right, in an uptrend, right? You spotted the trend here and you started to take your buys up to the upside. The moment you spot the lines at the top side and you are in a buy, that should tell you it's time to exit the market. Okay, so you close your trades the moment you see the dotted lines appear to the top side. That's basically how to use the parabolic stop and reversal. So here we are on the chart. Let's see how to insert a parabolic indicator. Parabolic, let's go to trend, parabolic stop and reversal. Let's choose a color of your choice, and here we go. So this is how it is on the chart, and we said if the dotted lines are above, we know we are for a downtrend. Okay, the moment the dotted lines are below, we know we are in for an uptrend. Okay, and so this is just how it is basically. I think this is kind of cool. I haven't used it. I don't use indicators in my chart, but I think this is just kind of cool. Okay, so let's move on to the next indicator. So how to use the stochastic indicator. It tells traders to determine where a trend might be ending either up to the downside. During the uptrend, price will remain or equal to or above the previous closing price, and during the downtrend, price will remain equal to or below the previous closing price. Okay, we don't want to go into the history, how it was, that we don't really need to. So how to trade the forex using stochastic indicator. When prices get to the 80 line, that shows that the market is overbought, and when stochastic line are below, the stochastic lines are below the 20, right, that shows market is overbought, oversold, rather overbought. So here we are, we see overbought scenario, see how it looks like. Okay, and subsequently when the trend changes, see how price fell down. Okay, and then in just the reverse is the case. If price goes to the bottom side, that shows that price is about to be bought, and if prices went up to the blue to the top side, that shows price is ready to come down. That's basically how the stochastic indicator works. You should know also something very, very important, that prices has gotten to a particular level in the market. Let me use a line. Okay, that prices has gotten to a particular level in the market. Say price has gotten to this level here. That doesn't mean automatically prices come down. Sometimes price will just be here, or even go up before coming back down. So you just can't really trust indicators. But this is what we are learning. Okay, this is stochastic indicator. Let's look at the live chart to see how it looks like. Okay, the stochastic indicator. Let's go to indicators. Let's go to trend. It is not here. Let's go to oscillators. It is here, and this is the stochastic by default. Okay, so here we are by default, how the price of the market looks like. Okay, so yeah, you see when prices crossed above this level of the 80, this is the 20, you see that here, you see 20 and 80 here, right? Here you have 80, and here you have 20. Okay, price fell down. Like I told you the other time, just recently, right, that prices above the 80 doesn't mean price will drop back down. In fact, they try to come back down, but what happened? They picked momentum again to the upside before coming back down, and it's still up again. And it's not down yet. Okay, so that's basically how stochastic indicator works, my friends traders. Let's move on to our next indicator that we have, how to use the RSI. Now RSI stands for relative strength index. Now the relative strength index is developed by Joe White, and it is used to evaluate the strength of the current market. It looks somewhat like the stochastic indicator, right? It is scaled from 0 to 100, and the readings is between 70 to 30, right? So if the price of the RSI is below or as low as 70, that shows that the market has been oversold. However, if the price of the RSI is reading 70, if the prices of the market has moved up to 70, that shows that the price of the market has been overbought. And this is how it looks like, right? You see prices rallying to the upside, and it has crossed the 70 area, right? The 70 level. That shows that the price of the market has been overbought. And what do you see here? Right, this is the overbought signal, and price tumbled down once it got there. And when price got to so low to the 30 area, you see it here, that signals that prices has been oversold and the price is ready to bounce to the top side. That is basically the idea behind the RSI, relative strength index indicator. Now let's look how to trade using the RSI. If you put the RSI on your chart, this is the Euro USD pattern, what it is showing us. If you put it on your chart and you see price falling, right, and finally you see price, spot price in this low here, right, you can take a buy. And when you take a buy, right, so what happened? Price, rally to the top side. Okay, and this is beautiful. If you had bought the market anywhere here, say here or even here, right, you would have made substantial profits. Okay, lower higher highs and higher losing higher highs. So that's basically how to use this the relative strength index indicator, right? Used to determine the trend and trade according to the trend. Now if it gets to the middle line, that's what pullback, right? And once it passes the middle line, you just know you're heading to the downside. So let's move on to this live chart to see how we can impute the relative strength index indicator into our chart. So here we are on insert indicators, and we see trend, and we don't have it there, and we have it here, relative strength index, and see how many average. Let's just go with the default 14. Now what do we see? We have the 70 and the 13, right? So we have 70, price crossed above, okay, and what happened? Price tumbled down. Okay, now it's almost got to 30 here, but see what happened, right? It's not as perfect, but where it came so perfect was where price actually broke the 70 area deep down to the downside. And what do we see? Right, price fell so down, and at this level, at this point, price shot back up. That's basically the idea behind the relative strength index. If it is sold down below the 30, right, that shows oversold market, right? Price will shoot up. However, if it crosses the 70, that shows the price is overbought, it's ready to shoot down. Okay, so let's move on. Next in our class, we have the Williams percentage range. So how to use the Williams percentage range? It is also called the percentage range using the symbol of the percentage. It is used to determine or to gauge the area in market where prices is overbought or a pair is oversold, right? It's more sensitive of the stochastic, and this is how it looks like on the live chart, right? To the top side you see overbought, and to the bottom side you see oversold. And it's like, it's just a momentum indicator, right? Like also the RSI, but it's quite different from the RSI. Like we have said, it has a scale of 0 to -100 and a scale of 0 to 100. A reading above -20 is overbought, and a reading below -80 is oversold. So that's how you determine the momentum in the market. So let's look for an example to see what we have here. Look at these readings right here. Okay, this is daily sharp, and see how price tumbled down. Okay, and this green, to the bottom side here, it shows the market has been oversold, and what happened? Price tumbled up, rose back up. That's basically how to use the Williams percentage range oscillator. Let's look at the live chart to see how we can incorporate it. Remember, today is Sunday, like I said, the charts are down. Okay, so here we are. It goes to indicators, come to oscillators, and here we have the Williams percentage range. Okay, let's use the 14 period. There's nothing wrong about that, and hit OK. And there you go. Let's look at the readings. This is the minus 20. This is the minus 80. You know, it's from 0 to 100. Okay, so look at the 0 at the top here and look at the 100 at the bottom here. You already know what it means, right? A reading above the minus 20 signals overbought, right, and a reading below the minus 80 signals oversold. Price will tumble up, price will trend up rather, and price will fall back down. So that's how to understand the Williams percentage range indicator. Okay, so let's move on to the next. So how to use the average directional index, ADX. This indicator only helps us to know or to gauge the direction of a trend. Unlike the other indicators, they've been telling us when to enter the market, where to exit the highs and the lows. However, the ADX doesn't do that. It's not going to tell you to get into the market and to exit. No, that's not the function of the ADX. It is used to give us the strength of the market pair we are currently trading. Either it's trend, right, it's trending up, down, or it is ranging. That is what it does. Okay, so it has its own readings from 0 to 100. However, the key readings fall below between 20 and 50. When it goes below 20, that shows the market is steam. There's no steam in the market. Market is weak. Traders are not very active. Perhaps it's a ranging market. However, when the readings go above 50, that signals a strong trend. That's basically all there is. It is used to identify whether the market is ranging or it is starting a new trend. The stronger the trend, the larger the reading, regardless of whether it is an uptrend or a downtrend. So let's see how to use the ADX. Okay, if it's in a rising trend, the indication is trend. If it is rising, it shows that it is strong, right? If it is falling, the trend is weakening, right? If it is below the 20, that shows a weak trend, and if it is between 20 and 40, that shows a strong trend. If it is above 40, the readings, that shows the trend is actually extremely strong. So let's look at the chart to see it. Now look at the ADS, it's less than 20, and what is happening to the top side here of the market? Price are ranging. Okay, price are actually ranging. So see that, and look here, the ADX is lesser than 20. Okay, however, when the ADX showed a reading of greater than 50, right, what do we see in the pair? Price trend to the downside. However, I don't know if you took note, did you see the red cycle above the ADX here? It actually does that. We're going to go to the live chart, to the chart, if we are going to see that. Okay, now also when it was trending, below 20, right, what do we see? Market prices ranging in this area right here. However, the moment the ADX read greater than 50, right, price rallied off to the top side. Okay, so we can see that. Now let's move on further downward to see what we can learn more about the ADX. How to trade using the ADX. Just know if you see below 20, pair is ranging, it's not moving directionless, right? You don't want to trade by then. However, when it starts raising below above 50, just know the trend is very strong. We are told 40 is a very strong trend, right? Above 40 to 50, that's an extremely strong trend. Okay, so that's also it for the ADX, the average directional index indicator. We use it to indicate either we are in a ranging market or in a trending market. Next is the Ichimoku. The Ichimoku Kinko Kyo, that's Japanese anyway. In Japan, right, Ichimoku means a glance, Kinko means equilibrium, while Hyo is Japanese word for chart. So it means Ichimoku
Ichimoku Kinkohyo means a glance at a chart in equilibrium. The Japanese brokers, they developed this indicator when they were using it to trade rice and all other commodities. So this is basically how it looks like, right? So let's go down to detail to see what we can learn from this indicator. From the chart we looked earlier on, we can see blue line, red line, green line, and orange line, and some clouds as well. They have their own figures that are imputed into those. The Kijun Sen, which means blue line, is the standard line for, or the baseline. It is calculated by averaging the highest high and the lowest low for the past 26 periods. The Tenkan Sen red line is also known as the turning line and is derived by averaging the highest high and the lowest low for the past 9 periods. The Shiko span, which is the gray line, is the lagging line. It's the current price of the day plotted from 26 periods ago. Okay, then the Senko span, the orange line, the first second line is calculated by averaging the Tenkan Sen and the Kinju Sen and plotted 26 periods ahead. So the second Senko line is determined by averaging the highest high and the lowest low for the past 52 periods and plotted 26 periods ahead. So this is how it looks like. You are going to have to take your time to come back, right, to actually read in detail and to see how to plot all of this. Although if you come back to read it on your own, that would be great. However, I'll drop another video where you are going to learn how to impute the figures into the Tenkan Sen, the Senko span, Kijun Sen, and the Shiko span. Okay, all this, and see how you can use the trade profitably. So this is how the price of the market, the chart looks like when it has been formatted. Okay, so in this area here you can see that when the price gets to the orange line, the second span, right, it has a first and second resistance area. The first and second resistance area. Here is the second resistance area and here is the first resistance area. When prices get to this line, just know that it is facing a very, very strong resistance area, right, of the cloud. Okay, and when prices drops down below the blue line, just know it has caught the trend to the downside, and what can happen is that traders are ready to buy the market. And what did we see? Right, we saw that prices rallied back up before hitting the first resistance area before price fell back down again. So basically this is how in default a glance at the trend chart indicator looks like. Now regardless of the market, right, Ichimoku emphasizes to trade in the direction of the trend and not against the trend. So by following the trends, Ichimoku can help you to avoid entering the wrong side of where the market is. So let us now move to the next lesson for today: trading with multiple chart indicators. So as a forex trader, you don't just want to be trading with one particular indicator. Why? Because we cannot rely 100% on indicators. Indicators, they lag behind, and I believe you should know that. If you do not know that before now, please do know that you can't rely solely on indicators. They lag behind. What do we mean by lagging behind? Prices of the market has already occurred before the indicators they come reading. Okay, so for that reason we can't trust them 100%, and so that is why many traders combine one or more than 3 indicators to be able to get a perspective and a balanced view. Okay, so you can combine the Bollinger Bands and the stochastic indicator together, and they almost work side by side. So looking at the Bollinger Bands indicator and the stochastics together, see, we know when price hits this area, right, of the blue lines for the Bollinger Bands, that's indicating what? Reversal to the downside, because and that is what in the indicator tells us, right? That is how we are to use it and see the actual activity here as well, right? It's related. Now look at the downside of the indicator after the trend. Okay, right, price rose up. I saw a rose up here in the indicator from the stochastic and the Bollinger Bands. Okay, so it is quite related and very close. So if you have these 2 indicators on your chart, you can use them to your own very, very good advantage. Now you can also combine the relative strength index and the moving average convergence and divergence indicator together to your favor. They almost want to work the same way as well. So if you have the same readings from the RSI and the MACD, right, you can have a good conclusion that you have the options to your side, to your advantage. Okay, you see price fall back down, price falling down. Right here, when it comes to the overbought, the oversold area, the MACD also crossed. You see the blue lines crossing to the top side. Okay, and what happened over here? Price rose up. In the RSI, price rose up as well. Okay, so combining indicators, it's a very good idea. So that is what you want to do. Have a good magic combination of indicators. Use it to your own advantage, because by so doing, you have the odds of winning your trades. The chances will be greater to your side. So let's move on to see which is the best indicator in forex to use. Now, coming to the best indicator in forex trading, I can confidently tell you, my friend, that there is no best indicator in the forex market. All forex market traders, they know that indicators, they lag behind. So you just cannot stand on one particular indicator and say this is the best indicator I'm going to use. However, Babypips did a back testing of indicators, and they came out with their findings. Okay, so they used all these indicators: MACD, Bollinger Bands, Parabolic SAR, Stochastic, and RSI, and the Ichimoku. And these are the parameters they imputed. You can use this as well if you want, and look at the rules they look up to, right? They use for using these trades. Okay, and then having done the trading, done the testing, right, and they came out with their findings. So what is the strategies to buy and to hold using all these indicators? The number of trades they took: 120, 153. Look at profit and loss in pips. Okay, what they profited and what they lost. Now this is where it comes interesting. For the Bollinger Bands, they were negative 19,500. For the MACD, they were in profit 3,900. For the Parabolic, they were in negative 9,700, and for the Stochastic, they were negative 20,000. For the RSI, they were negative 18,000 US dollar. However, for the Ichimoku Kinko Hyo, that terrible indicator, that's so ugly, it came out with a massive profit of 30,341 US dollar. So from the back testing that Babypips did, that Ichimoku Kinko Hyo indicator was the most profitable indicator that they had, right? That came out with good results. And look at profit and loss in percentage: 30% ROI, right? And that shows that is a very good indicator. You can use it if you want to use it. Okay, with a little more practice, you get a better hang of it. So let's go to summary of what we have today. Right, summary of all the indicators we have been using. We've talked about the Bollinger Bands, right? How to trade it when it is squeezing. If it is squeezing, just know that it means that the market is very quiet. However, when it's expanding, know that the trend is changing. The market is about to trend up. Okay. However, no, when the price hits the lower Bollinger Bands, you want to buy. When the price hits the upper Bollinger Bands, you want to sell. Now the MACD, you have two moving averages, the slow and the fast one. Okay, the moment the fast indicator crosses over crosses the slow one to the upside, you are up for an uptrend. Okay, however, when the MACD, the fast indicator, crosses to the downside, right, just know you're up for a downtrend. Now the parabolic stop and reverse, we know when the dotted lines appear to the top, okay, of prices, we know we are up for a downtrend. However, when the dotted lines they appear from the bottom, just know we are in for an uptrend. Okay, that's the parabolic stop and reverse. For the stochastic, we know it's a more sensitive indicator, right? And it gives us momentum, okay, of the market. It just gives us momentum of the market. And so we want to remember we have the 80 and the 20 levels of the stochastic indicator, and we know how to execute them as well. Like I said, I'm going to drop another video again on how to really trade using these indicators like the professionals do. We are doing a summary here. The stochastic and the RSI relative strength index, they're almost the same way, right? When it is above the 70, when prices trade above the 70 or the 30, no, this is an overbought situation. Prices are overbought, markets will come back down. However, when prices trade below the 30 level, just know the market is in an oversold situation. Prices will rise, trend back up. Okay, then at the average directional index, we only use it to gauge the direction of the market, not to tell us either it's a uptrend or a downtrend. Okay, I mean, we use it to gauge the strength of the market. So if the market is ranging, right, and it's not trending up or down, what do we have? We will see a reading of -20. Okay, we'll see a reading of -20. However, when prices break above this ADX, right, indicator, what do we see? We see something like this, and prices is greater than 50. Okay, however, remember, if you see a reading of 40, right, no, this is a very strong trend to the it's very strong trend. However, if it is above 50 or like by 50, no, it is an extreme trend. Okay, it's an extreme trend. That's how we use the average directional index. Now the Ichimoku Kinko is one of the most profitable indicator that the Babypips has done the back testing on. If the prices above the span to the top side serves as support, right, we'll have support 1 and support 2, right? So that's basically how we are to understand all these indicators. For the Ichimoku Kinko, you can do your own research, or you can wait until I put out the videos of how to actually understand and format the Ichimoku Kinko technical indicator, and do all of this. I would have loved to do that now, but I've been going through a lot recently. That was like 6 days ago. I lost somebody very close to me. I lost my father. He died. He died at the hospital, and so it's been actually a very I do not know if you've lost someone before. It's not what any one of us want to happen to us, but yeah, it does happen. It's a very difficult situation to explain. I do not know how to really say it, but it comes with pains of heart and everything. This is the man who gave birth to me, who took me to school, who gave me sound principles in life, taught me many things I know today. He's a loving father, he's a strong man, and he's an African, and I'm an African as well. And so we lost him, and we are going to lay him to rest very soon. Not yet, we haven't yet fixed a date for that. And I am traveling next week to my hometown to have a family meeting with my family, and then we'll pick a date to lay him to rest. So from this part of the world, from Nigeria where I live, that is how our customs and our traditions are. It's unlike yours in the United States, where if somebody dies in like a week or a 2 weeks interval, maximum a week or in 2 weeks interval, he's been buried and all that. So that is what I've been going through, and it's been hurting. It's been sad. I know you might be wanting to ask about my ma. My ma died 5 years ago. That was in 2015 October, and just 5 years interval, I lost my dad as well. So it's been really very difficult situation. I haven't even heard from the loss of my ma, and now again my dad is passed away. But it is what it is. We cannot, this is life for you. But I am a Christian. I strongly believe my mom and my dad, they have a hope, right? But that hope is in the hands of our life giver, Jehovah, was his name. And he's the one who can bring any one of us back to life again. So we pray. I honestly pray, sincerely pray for God's kingdom to come, so that I can meet with my loved ones again. So fellow traders, friends and family, as you go about trying to make a living, learn forex, trade, do whatever you want to do, Remember your loved ones, okay? Do not leave them behind. Hate on nobody. Have no grudge against nobody, because this world is just a little place, right? We do not know how far we're gonna go, so there's no time hitting on somebody for no reason, when we have all we can gain when we just choose to love people, to love our family members, love your husband, love your wife, love your brothers, love your sisters, love your neighbors, do good, help others. Scientific reports have shown that when we do good, when we love people, when we help people, we tend to live longer. We tend to be the better of ourselves. We tend to enjoy life the more. We tend to be more happy. We tend to have no problems. Our whole being just improves to the better, or for the better. Okay, so our average directional index is always above 50. Okay, we are always trending. We are always trending to the top side. However, when we hate, when we do not love people for who they are, when we do not love them for just being they themselves, okay, we range. We do not go up, neither do we go down. We range. We are lukewarm, and nobody wants to be like that. Okay, we fight back with emotions here and there and all that. We're not happy with ourselves. Whatever we do, we're not making progress and all that. We don't want to be in this cycle, not at all. We don't want to be in this cycle. We want to be in a cycle that is to the top side, always moving up. Even when we come down, we bounce back up. We come down, we bounce back up. We come down, we bounce back up. And this is where we want to be, the trending side. We want to be trending to the upside. Okay, so even though I have lost my both parents and I'm still single, I'm not married, I know right now I'm in my lows. Okay, but not just the lower of the lows. No, I'm in the lower high. Did I just say lower? Yeah, I'm in my higher lows. Okay, I'm in my higher lows, and I will bounce back up and go to a higher high. That's just life for you. We all have our higher highs and our higher lows, and many people have their lower lows and the lower highs. They're always going to the downside. Okay, but we want to be to the very reverse. We want to be to the upside. We want to be going to the higher highs and higher lows, higher highs and higher lows. Do whatever we can to be the best version of ourselves. So that is what it is, friends. That is what I've been going through. I lost my parents. I am now an orphan. It's sad, but that is what it is. I have no daddy to call. I have no mama to call no more. I only have my family and my friends. So if you still have your father, if you have your mother and they are alive, listen to this. Okay, love them so much. Show them much love, because when they are gone, they are gone, and you cannot do what you wish you want to do 5 years to come with them. Now that you have them, show the most of the love you can for your parents. Well, that is all I'll be dropping for now. So when you watch this video and you appreciate all we have been doing since the beginning of the course of Babypips, right from course 1, now this is course 3. You are graduating from course 3. We'll be moving to course 4. If you appreciate all this we have been doing and you have watched up to this extent, and you can see even those I am in my higher lows, I'm still dropping this content until I return back from my family meeting before I continue putting out more content there. If you want to support this channel, if you want to support what we are doing, please smash the like button, subscribe to this channel if you haven't, share the videos, right, to your friends and family, and until next time, take care. I love you all. Bye. And until next time, take care.